Thank you so much for your kind words. I really appreciate it. So I think that the Fed cutting interest rates by 50 basis points will impact the housing market. Mortgage rates will decline. They have already declined from 8% just over a year ago to now about 6.15%. And mortgage rates should decline further as the Fed is expected to cut interest rates by another 50 basis points by the end of this year and another 100 basis points by end of next year. So by the end of next year, it's likely that the Fed will have rates about 3.5%. So that'll likely attract home buyers to get into the housing market and try to buy some homes because mortgage rates are down. There'll be also more refinancings. People who are currently living in homes haven't been willing to put their homes on the market because they don't want to trade in their sub 4% mortgage rates for above 6% mortgage rates. And certainly as mortgage rates were in the 7 to 8% range. But as mortgage rates decline, especially as the Fed cuts interest rates more and 10-year bond yields decline further. At the end of the day, mortgage rates are actually linked more to the 10-year bond yield. So if the 10-year bond yield declines further, then mortgage rates will decline further. The mortgage rates are indirectly tied to the Fed cutting interest rates. But as that process happens more in the months to come, yes, mortgage rates will drop further. And I expect there'll be more supply of homes on the market. But there also will be more demand for those homes because the monthly payment will be cheaper. So if anything, I do see prices still rising, but I see the net effect for home prices maybe about 3%. I don't really see a substantial gain in home prices because there'll be a new supply of sellers putting their homes on the market. And overall, this will be good for people trying to get homes and start a family. Borrowing costs in general will decline. Auto loans will be a little bit cheaper, as well as credit card debt. Credit card debt will also decline in terms of interest rates. And then I've made videos previously, but I think the stock market should do well if the Fed cuts interest rates into no recession. The market does well 1 year out, and if the Fed cuts interest rates at or near all-time highs, 20 out of 20 times the market does better 1 year out with gains of about 15%. So in the stock market, it also bodes well. And gold already hit a record high. I think Bitcoin will do well. But either way, I think the housing market, the net effect, home prices shouldn't jump too much. But the good news is that mortgage rates will decline, making the monthly payment lower.